Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically in the previous lecture we had started the discussion over the Banking Regulation Act 1949. Okay, basically we had just not only taken the overview and the introduction of that act, but we also discussed about the background and the enactment of the act and what was the need behind implementation, or you can say behind the introduction of such kind of act. Okay, we had discussed these things in detail. I hope that you have revised the previous lecture before you have arrived for this lecture. What was the reason? I had told you in the last lecture, in the last part of that, because the BRA is very essential for the banking exams. So if you are not revising it and you are just completing the videos, you will not be able to keep this thing in your mind for the long term, and this will be regretful moment for you in your examination if you are doing such kind of things. So make sure you revise the facts and figures properly before you have arrived for next lecture. Okay, so this is the topic, the main topic. It is the part, and this is the index of Banking Regulation Act 1949. Introduction we had covered, background and enactment we had covered, objectives we are going to cover. Okay, so basically you can say in the previous lecture when I was giving you the overview on BRA introduction, on BRA introduction, I had mentioned about the need for the introduction of such kind of act. Okay, and these need were like, first, British system to Indian system. Okay, second, control private players. Okay, and the third was financial inclusion and growth. All right, these were some of the main objectives. So now we are going to discuss these kind of objectives in detail. All right, the first one is regulation and oversight. Establish a legal framework for regulation and oversight of banks to maintain stability and integrity in the banking sector. Ensure that banks operate within the bounds of the law and under the purview of regulatory authorities like the Reserve Bank of India. All right. So I had told you one thing. When the BRA was introduced in 1949, okay, the first thing is that its name was not BRA. Its name was Banking Companies Act, right? 1949. That was the name we had discussed. And one thing was also happened in correspondence of the BRA. And what was that thing? Now this is the question I am asking you. What was the thing happened side by the introduction of the BRA? The correct answer is Reserve Bank of India was nationalized, right? And second thing happened was it was established as a regulatory authority. Okay, so these two things were happened with the BRA. All right. Okay, so now first thing is that all the banks we have on that time, we had to regulate the actions of that banks. Why? Because remember I had told you banks basically plays a significant role in management of economy. Okay, because what do you mean by the economy? Economy is basically refers to the organization of economic activities like buying and selling. And we know after the arrival of Britishers, buying and selling is totally based on the monetary terms, right? And these monetary terms refers to the currency and the money of the country, and the currency and the money basically regulate and operate by which organization? By banks, because they accept the money of their depositors, they grant the loan and investments to the you can say their customers. So that's why they are totally controlling the money supply in the economy. And buying and selling, which are the basic activities of the economics, are being controlled by the money supply. That's why the banks are very essential to be regulated. Okay. Second thing which we had seen is that Reserve Bank of India was basically the authority which is to be oversight. Oversight means to surveillance the activities of banks. Okay, like how the banks are operating. Okay, these things are done by the Reserve Bank of India, or you can say, suppose if the BRA published a charter, this is the chartered. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, 10 rules and regulations written on it. Okay, and thereafter there are X, Y, Z, A, and B. 5 banks which are to be operated as per the charter. Okay, now the question is how we can make sure these banks are working as per the rules and regulations of that charter. By only monitoring them, by only oversight them, or by only surveillance them. That's why we need a proper organization which will do all these kind of things. In our case, it is RBI. Okay. Now I hope you have got a clear cut understanding of the first objective. First thing is that we require to regulate and control the banking structure of the economy because they controls the money supply on which the basic activities and other advanced activities of the economy are based. So if these organizations are not controlled or regulated, you cannot imagine how far the negative consequences we have to bear. Okay, and the second objective was establishing of an organization which will be working with the government to ensure that all the banks are following the certain rules and regulations which are designed in accordance with the need of the time. Okay, now define the roles and responsibility of regulatory bodies in overseeing banking operations to prevent malpractices and financial misconducts. If we take an example, suppose X, Y, Z, A, and B. These are the 5 banks operating in an economy, and this is the chartered 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, this chartered basically contain 20 rules and regulations. All right, and thereafter we had an organization named as you can say TUV. Okay, this is basically the organization which is required to surveillance these 5 banks, how they are working, are they working in accordance with these regulations or not. Okay, now the main question is here is now that what if TUV found all of these banks and some of these banks are not working as per the rules and regulations, what they should do. Okay, you had made it for you can say overseeing the banking activities. If they had found that there is something wrong with the banking activities, what should be their next step, what they can do. These things are also designed in the BRA, or you can say appropriate actions and appropriate steps to be taken are properly mentioned in the BRA Act 1949. Okay, all the powers vested with the TUV, all the set of actions required to be taken by the TUV, all these things are mentioned in the BRA. Okay, like what should be done if TUV found out that some of these banks, all of these banks, and only one of these banks is doing something wrong, which is not in accordance with the 20 rules and regulations, and you can say as per the mandate described. Okay, let me write down again in the clear format. Mandate described. All right, now thereafter the depositor protection. Safeguard the interests of depositors by enforcing rules that ensure the safety and security of their funds. Okay. Provide a mechanism for deposit insurance to protect depositors in case of bank failures. Now it is a topic of detailed discussion or somewhat of detailed discussion. If I'm ask you, tell me the 2 basic banking activities, what should be your answer? The first answer is accept the deposit. Okay. Second answer is grant a loan. Okay, these are the 2 activities generally comes in our mind whenever we talk about banking activities. Okay, so here are 2 types of people. The first people is the depositor. Okay, the second people is basically the loan taker, or you can say the customer. All right, and remember in the previous lectures I had given you a better example. The example was no one is more greedy than bank. Okay, that's what I had told you. All right, so let's understand this topic. First of all, we are required to understand the earning process of the banks. So banks generally gives interest on the deposits, and it generally received interest on the loans. Okay, so you can say bank accepts the interest as well as you can say gives the interest. Okay, so now there are 2 people. The first is the depositor. Okay, suppose this depositor submit 20,000 to the bank, and bank had promised 5% interest to him. Okay, so there is a second person who is the loan taker. This person has taken a loan of 20,000 at 10% interest. All right. So the depositor will get the interest from the bank about 20 into 5 divided by 100,000 rupees. Rupees 1000 was the interest which is to be given to the depositor by the bank. Whereas the bank will get a interest of rupees 2000 from the loan taker. Okay, so if you see this picture clearly, you will find out there is a rupees 1000 profit or income for the bank. Okay, they had to give 1000, they earn 2000, so they will simply minus 1000 from 2000 and the remaining 1000 will be their income. Okay, that's how the banks earn. All right, and that's why there is a issue with the bank intentions, or you can say a bank operation basically, because the more they grant a loan, the more they will earn. Okay, we could take an example over it. Suppose if the bank is granting rupees 10,000 at 5%. Okay, how much they are earning? They are only earning 10,000 into 5, 500 rupees, 500 they are earning. Okay, but if they are granting 10,000, sorry, 1 lakh at 5%, how much they are earning in this case? They are earning rupees 10,000. So now you can see with the increasement in the loan amount, there is an increasement in the income of the bank. Okay, so that's why the banks always focus on granting the more and more loans so that they could earn more and more money or interest. But here is the question of depositors' security. Now you can ask me, sir, what is the issue with the depositor? Like if I have submitted my money in the bank, okay, so I can borrow it, I can withdraw money, okay. So why there is a question of the depositor security with the banks? So let me tell you. Suppose there are 10 customers, or you can say there are 10 depositors of the bank. All right. Each depositor deposit rupees 10,000 to the bank. So the total deposited amount will be how much? Rupees 1 lakh. Right? Okay. So rupees 1 lakh has been deposited with the bank right now. Bank provided this loan to two person. Rupees 50,000 each. Okay. Now both of them defaulted the loan repayment. And if such kind of things happen, what we call it? Now tell me, what do we call it if something like this happened? We called it NPA, non-performing assets, right? That's what we had discussed in the previous lecture. Now, these two persons are the NPA for the bank. Okay. Someday, the 10 customers who had deposited their money with the bank, they reached the bank and asked for the return of their money. It means they had went to the bank for the withdrawal. The bank has no amount presented with it. Why? Because these 10 customers deposited rupees 1 lakh. The bank granted two loans of rupees 50,000 each. It means entire amount which had been deposited with the bank has been granted as a loan. And there is no repayment of the loan, or you can say there is a NPA condition. In this case, these 10 customers will lose their money. Okay, and you could have various examples in the past. You could go do the internet suffering for this kind of things which happened in the past. Okay, and this 10 persons who will lose their money will also lose confidence in the banking. It will not only the fall down of the bank but also the fall down of the economic activities. Okay, so that's why there is a provision for the depositors protection. Okay, and depositor protections basically you can say ensure by implement stringent prudential norms, reserve requirements, and capital adequacy standards to mitigate risks and protections depositors interest. All right, and this is basically done by which two areas? SLR and CRR. SLR and the CRR. The SLR stands for statutory liquidity ratio. Okay, and CRR basically stands for the cash reserved ratio. And what are these two things? We will have a discussion over it. We already had a discussion over it in the past, and we will also revise it again. So till then, just make sure this kind of things is done for two ways. The first is for the maintenance of the monetary policy, how I will tell you, and the second is for depositors protection. Okay, these two are the main aims behind the SLR and the CRR. All right. Thereafter, we had the sound banking practices. Promote and maintain sound banking practices within the industry to ensure financial stability and minimize systematic risk. Sound banking practices basically means authenticated activities. Okay, or you can say transparent and proper in accordance with the law. All right, if the activities are being done in this format, then these are known as the sound banking practices. Define standards for prudent lending. What do you mean by prudent? Prudent basically means being careful. Like in order to avoid the NPA, or you can say non-performing assets. In order to avoid the NPAs, the bank must be careful and prudent. Okay, means the customers who is asking for the loans, there must be a check for its capability, whether he is able to return this kind of loan. Second is his history. like is there has been any default by him, and third is ensure the collateral security. It means that suppose in somehow the person is not able to return the loan, or we can say if we took the previous example where there are 10 depositors who were asking for withdrawal of their amount, right? And their amount was total rupees 1 lakh. Okay, and we had seen the bank basically granted loan to two persons worth rupees 50,000 each. Okay, so in this scenario, suppose if before granting the loan, there are two scenarios basically. Before granting the loan, if the bank has checked out their capability and their history, so the bank will not prefer to grant the loan if they find out something unusual with them. And the second is if the bank had kept the collateral security. Collateral security, what do you mean by it? If I'm asking you, tell me about the collateral security. So, how you could explain it to me? So basically, collateral security is security or anything or any item which is to be deposited or submitted with the bank before taking a loan. Okay, it is the first point. The second point is that this security must be equivalent to the loan amount in monetary terms. All right. And the third point is that in case of default, the bank could sold out the security to recover the amount. So there are 3 points related with the collateral security. The first point is that it is basically anything which is to be submitted or to be deposited with the bank while you are going to take an amount. Okay. Second point is this security must be equivalent to the loan amount in the monetary terms. And the third point is that in case of the default, or you can say the person is not able or not willing to repay the loan, the bank could sell out the security to recover the amount. Okay. For example, suppose that person had gone to the bank to take a loan of rupees 10,000. So he must have to submit something which is equivalent to the loan amount. Okay, which means if the bank sell out this product in the market, the bank will get rupees 10,000. Okay, then this amount will be used as a recover amount. So if similar thing will happen in this case, okay, and the bank had kept the collateral security from both of them, like from A and from B. Okay, so in case of the default, the bank will sell out these two items. Okay, and because the collateral security has been equivalent to the loan amount, so the bank will get rupees 50,000, rupees 50,000. The total amount will be rupees 1 lakh. Okay, and this amount will be granted to the depositors. Okay, that's why the prudent lending is essential by taking the collateral security. Thereafter, the risk management. Like if the bank has found out the person who is taking the loan or the person in which company the bank is making the investment must be pure so that the bank could trust on him. And thereafter, ethical conduct within the banks. Like if the customers who are visiting the banks, there must be equal treatment to all of them. All right, these are the some points. So students, basically in this lecture we had covered the sound banking practices, about the objectives of the BRA. In the next lecture we will begin with the same topic. Till then, just revise the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.